Nick Mueller from Stewart-Peterson is our market analyst this week. The USDA Wednesday made changes to its demand numbers for corn and soybeans. The agency slightly adjusted corn ending stocks 10 million bushels lower and decreased soybean ending stocks by 40 million bushels by increasing soybean exports. The USDA left its soybean production numbers in Brazil and Argentina alone. The estimates would be new highs, with output at 94 million metric tons in Brazil and 55 million metric tons in Argentina. By comparison, the U.S. harvested nearly 108 million metric tons of soybeans this fall. We talked with Nick Thursday morning and began by asking for his thoughts on the USDA's latest report.
You know, I would say supportive numbers, right? We finally got corn under that 2 billion bushel mark, and beans dropped, ending stocks dropped more than anyone expected, right? So we're down to 410. What I'm a little more concerned about is the market reaction off supportive numbers, and we were down all day.
So what does that mean for its mentality?
Well, considering we rebounded today, I'm not sure much, but I mean, the general feel is you see a bearish reaction off a bullish report, you know, something else isn't in play and you should be concerned. You know, I think in the bean market, we've had outstanding sales. Export demand's been outstanding. That needed to be accounted for, and everyone was hoping the USDA did. They did it more than anyone expected. That being said, I mean, this is following the exact pattern, other than it being a little higher, that we saw last year, and it's following the exact 5-year pattern, and we should expect from here on out sales to be shifting to South America until they just completely dwindle. And I think the market's concerned about that, and that might be part of the reaction we saw.
So the demand environment for soybeans would be characterized as what, as you look at big crops from the top 3 producers?
I would say outstandingly strong, and I don't see that changing at all. What I do see is where that demand's being applied around the world, shifting away from the U.S.
Okay. Tell me about the counter-seasonal rally you've been talking about here in October.
Yeah, it was rather amazing. So we had a couple things we talk about at Stewart-Peterson, we've talked about for years, is, you know, it's the direction ending stocks are heading that affect price direction, not the ending stock number. And nothing could have proven more true than what we've seen in this counter-seasonal rally, right? All year, the crop just kept getting bigger. We kept looking at the ending stock number, and on every USDA report we got, it got larger, and then we got another USDA report, and it got larger. And what was the one thing different on the October report? It finally came down a little or stayed steady. Still a really bearish number, well over 2 billion bushels, but that was the first time the crop stopped getting bigger. And you look at the traditional funds, which have amassed a net short position, over, you know, as the crop kept getting bigger, they kept getting more short, and now they finally knew, okay, this is as big as this crop's going to get. And they don't want to go into a new season being net short, right? All the uncertainties left out there, so they started covering that net short position. So we've seen a nice counter-seasonal rally since the October report, and now we're kind of in a standstill, right?
Yeah.
So it doesn't affect direction, the number itself. What it does affect is amplitude, how much we can move up or down, and we're seeing that 2 billion number capping this rally.
So January's report, when we'll get final harvested acreage and we'll see the stocks numbers, could that be very volatile, do you think, or no this year?
I wouldn't expect it to be overly volatile. That being said, every report now, I mean, if you're watching the intraday trade, every report is volatile. I mean, the market's moving before I get one piece of news over my computer. What we are seeing in reports, though, they're traded very quickly. I mean, instead of trading them for a day or two, they're traded for about 2 minutes, and then we're on to the next thing. And we'll probably be on to South American weather at that point.
Do you think the RFS and the uncertainty over targets is affecting corn or bean markets at all?
I don't, and I could be wrong on this, but I tend to think it doesn't have an overall big effect. I mean, at the end of the day, the supply-demand functions kind of rule, in my opinion, and I don't see it having a long-term effect.
What about sustained low prices in crude oil?
That could, and I think we're seeing some of those effects right now. And you know, when you look at what gasoline stocks did, I mean, they were 4 times what was expected, and there's no reason not to target crude under 60 at this point.
So if you have some corn that's still sitting in the bin, what would be your cash targets, or at least your thoughts on mentality of trying to sell it or move it?
Yeah, I mean, if we just go off the March contract, which is pretty much the front month at this point, almost right here. I mean, anything right around this $4 level futures price, I like making those sales. I'm not against buying calls. Personally, I would wait for a pullback. I think into the first of the year, but this market could have another leg higher, and it would need to be led by beans. But I I still believe right now, into the first of the year, just after the first of the year, we may have seen this counter-seasonal rally peak. For the couple cents you may miss on the upside, I like making the sales here. You can re-own with calls later on, and that's what I would look at doing.
What are your thoughts then on selling old crop soybeans?
Essentially the same. Yeah, I mean, everyone was talking that head and shoulders formation in front month beans and targeting 950 off of that. We broke it one day, never closed below it. Now I think I was hoping we'd have a bigger spike off of the report in order to sell some more old crop beans and really look at starting to defend some 2015 fundamentals. I mean, bean prices are very resilient. I mean, they prove people wrong all the time. Fundamentally, though, I mean, we still point to, somewhere between 850 to 950 is a real possibility.
Last year, I think it was last year when we talked, and you mentioned how concerned you were that inputs weren't receding enough and margins were going to be really, really tight. What are your concerns this year about where you think margins are going to be?
Two things. One is, and they're completely the opposite, but one is I'm very concerned about bean prices going into next year. I think we could see a fall there. That being said, this market could bottom very early, and I also believe that people aren't prepared for how high it could rally. I don't expect any kind of inflation anytime soon. I think we're actually in a deflation mode. At some point that will switch, and maybe it's not even this year, but I also think just as people aren't prepared for us falling, down the road they're not going to be as prepared for how high we can go yet.